Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the daily recap. Just a reminder, if you've been in the VTF today, or if you're a subscriber to the VTF, immediately after the daily recap, Scott, who normally does a swing trading mentoring session every Tuesday at around 4:15, is going to be doing a Q&A mentoring session for the entire main room of the VTF. We have a lot of new subscribers this week for the Twitter IPO. Wanted to give people some exposure to Scott's analysis and have them get some of their questions answered in the main room. So stick around in the VTF for that mentoring session after I'm done here. Anyways, the market today, another pretty quiet day. We finished down, but we're still above the 8-day moving average. I can go ahead and take a look at the chart. Not a lot to say about it. We're just sort of resting up here this week. After some volatility or some nice, impressive bullish action over the last few weeks following the resolution of that debt ceiling deal, we're now sort of just consolidating those gains. We allowed the 8-day moving average to play catch up. The 21-day is still trying to play catch up, still has some room. So I think this is healthy type action that you'd like to see on both sides here. I think obviously the bears like to see a little bit more downside type action, but there doesn't seem to be a lot in the way of this market making new highs through the end of the year. You get the Santa Claus rally type situation also when you get into December. We're already coming a couple weeks up on Thanksgiving, so just something to keep an eye on there. I definitely wouldn't have short on the brain here, but also the setups are getting a little bit more sparse on the bullish side too, so I think it's a time to sort of retrench a little bit and maybe sit on your hands until some better setups present themselves. That's not to say there aren't a lot of great setups that are happening in the market, though. There continues to be every day to be a handful of stocks that give you great momentum, and today that was obviously the 3D printing stocks, and we talked about several of them in the morning call this morning and on the Off the Charts newsletter. You go take a look at the charts. DDD is the big one that we've been watching. That was listed a while back, Triple D, on the Off the Charts newsletter. Broke out, hit our targets, and we took it off because it had reached our targets already, so we started listing SSYS because it was setting up for a potential catch-up type situation. As you can see, SSYS has made that breakout. Today, tried to push higher after yesterday's pullback, but finished off its highs a little bit, so could signal there's a little bit of rest due. But then you look at VJet. Huge move there today. The recent IPO that Mike and Steve LeVay in the Trade the Morning mentoring room have been following closely. Had a really impressive first day of the IPO, which we'll talk about a little bit more later. Impressive first couple days, wedge pattern to consolidate those gains, and then broke higher out of that wedge pattern. Another one that was listed on Off the Charts. Talk about XO&E. Also an impressive 2 days there. This is one that was beaten down, looked like it couldn't find a friend for most of September, early October. Finally perked up, held those gains throughout October with some sort of sideways action. Then the last 2 days has perked up really impressively and has cleared some important resistance levels there, so it could continue higher. Really huge percentage moves there from the 3D printers and the type of volatility that you look for in the market, and we were able to highlight it off the charts and in morning calls and daily recaps over the last couple weeks. A couple other things today to point out really quickly before Scott gets into his mentoring session. Tesla was one that everybody had their eyes on, reporting earnings after the close today. I think people were a little bit scared to be short this stock going into earnings given the recent earnings performance of the stock. People have compared Elon Musk to Steve Jobs, not just in the fact that he's an innovator, but the fact that he's been able to beat Wall Street expectations at several turns. So impressive action there. I'll take a peek at the 5-minute, 24-hour after the close to see if the earnings report is out yet, and it is, and it's a disappointment. So people were scared to be short Tesla heading into the earnings report, but it looks like the report was not up to expectations. Going back to the daily chart, the stock is right now around 158. So you start to look at your levels here. The low of this candlestick is 153. So this will be the key level to watch to see if Tesla holds above it. It's still about 5 points above this low from last week. So that'll be a key level to watch if Tesla stays down here after hours. And then the solars also remain in play. FSLR sort of inching higher after that big igniting bar on earnings from FSLR, and then SCTY has been the other one that's been really in play in the group. Yesterday, really impressive move, but closed well off its highs. Today, gapped up, put in a little bit of a doji candlestick, but healthy to see it hold higher today after that type of action. And then we'll go to the social media stocks ahead of the Twitter IPO. Today, Facebook opened lower after being weak the last couple days. Obviously, you had that wild ride on the post-earnings day where it was up big after hours, and then the conference call came, and they talked about how teens were fleeing the site. The stock ended up opening lower, but then engulfed the previous day and went negative to positive the day after the earnings report, but then reversed lower, but found support at the 50-day, and today engulfed yesterday's move. So could be headed higher, could be some residual enthusiasm about the Twitter IPO that, by all indications, looks like it's going to go off very successfully. And then LinkedIn. LinkedIn today also found some footing over the last few days around the 50-day moving average or 100-day moving average in this case. Today looked like it wanted to push higher, but did close off its highs a little bit. But it's one that could get some increased attention with the Twitter IPO. So that'll do it for today's recap. Again, tune in for Scott's mentoring session, the main VTF, if you're a subscriber, immediately following this. But overall, I think the focus right now is very heavily on Twitter. People sort of, there has been great movement in the 3D printing stocks and stuff like that, but I think in general, everyone's sort of gearing up for that IPO. I think that could help explain a little bit the reason why the indices have been a little bit quiet, but they continue to raise the range, or they raised the range once of the IPO. There's talk they could potentially raise it again. It's a sign there's been really strong demand during the roadshow for Twitter, so they are sucking a little bit of the meat off the bone in terms of the retail audience, but I do think that there still could be some juice left in this thing regarding Twitter when it comes to the public market. So definitely worth being in the VTF if you're not a subscriber for this week or you're on a free trial. So definitely stay tuned to Scott and Mark and those experienced guys that sharpen their teeth in the trading business, trading IPOs. So this has been your daily recap from Editor-in-Chief John Darcy, and we'll see you back here tomorrow morning for the morning call.
I'm sure you've heard probably once or twice that Twitter is hitting the initial public offering market. My name is Scott Redler. Some know me as Red Dog. If you follow me on Twitter, at RedDogT3Live. With Twitter coming public, it could be one of the most exciting trading days of the year. You've heard everything about Facebook and how it came out the first day, it was a disaster. You've heard that LinkedIn was a success. You have to have a plan to know what to look for. Here at T3, we talk about the art of the first day of an initial public offering. We measure the supply and demand of that new issue when it hits the tape. Whether or not you should be involved in the first 5 minutes, 15 minutes, hour, or whether you have to wait. Let us help you sift through the noise here on our trading floor, within our virtual trading floor, because you're not going to find me on Twitter on Thursday and Friday. You're going to have to follow me here on the virtual trading floor because I'm not going to be on Twitter. Go to t3live.com, sign up for a 7-day free trial, tune in on IPO day, witness what those in our community see every single day. When Twitter comes public, I'd love to see you trading right next to me. Hope to see you there.